Waiting on this number to show up. There it is,
All right.
236. Okay, so a little hotter than anticipated, or I guess in a negative way. 236,000 unemployment claims coming in compared to 220,000. Remember that we just had last week a significant beat in unemployment claims. Maybe people just put it off by a week and waited putting it towards this week. So we do see a little bit softer in terms of unemployment claims. Dollar index is losing more ground here as we speak. Bitcoin has already been down here this morning. That's a big mover, sort of coiled up here towards the lows. S&P, NASDAQ, little mixed reaction, slightly softer after the print. Gold moving up just a little bit from its lows here just an hour ago. And silver, same thing. Silver, Chris, what do you think about silver, man? Silver is an absolute machine recently.
Just enjoy what it's doing. It'll be normal sooner or later. Expect a lot of volatility. I know. Look, when you hear a lot of traders that are like, "I want to add more silver," they're not prepared for the volatility that silver can bring. It's way more volatile than an index.
It is.
Yeah, I mean, it's up over 100%. So, I mean, that means it's going to come with probably 30 to 50% swings at some point. So, I mean, if you're in it, enjoy it. If you're at some point like, I want to protect profit, start adding some covered calls. If you have SLV positions, if you're trading, futures, I mean, you can still like scalp futures. I don't know. I think that there's volatility ahead. That's all. I mean, you don't see you look at lumber did it, cocoa did it, coffee did it. Like silver and gold have done it this year. They'll have pullbacks.
Commodities are interesting in the way that they can really surprise you with how much volatility they can have. I mean, look at this just as a reference, just because you mentioned that in 2020, we watched silver drop by 40.5%. That was more than the stock market dropped. So to your point, they can be beyond volatile, more than maybe even higher beta than stocks in some moments, which is surprising because maybe not so surprising. Silver has had such a remarkable move this year, but anything that has a remarkable move, doesn't matter if it's Tesla, coffee, silver, gold, NASDAQ, anything that has that higher volatility, it cuts both ways, right?
Absolutely. And I mean, look at copper this year, really disrupted. I mean, I have no idea what's going to be the turning point for silver. But yeah, I mean, you can look at all your pure. I mean, let me pull up a workspace that has some of my favorite technical stuff on it. See if we can find some divergence and overbought, oversold conditions. It's probably, I'm curious, like where the relative strength is right now, just as a reading, because it might be, some of those highest levels that we've seen. Let me find this.
Yeah. And Chris, if you want to share your screen when you get a
chance, I will. Just give me 1 second here.
Yep, no worries. Guys, just to catch you up while he's getting that ready, NASDAQ here rebounding a little bit from its overnight session. VIX up 1% here today, trading around 16. Bitcoin, though, taking on some water, still rejecting, man. I was really looking for this. I was looking to see, can Bitcoin get back above as a bit of a barometer? I don't really own or hold passively crypto, at least for now. But from a trading perspective, I was looking for this kind of move, and we just didn't quite get it. So maybe it's still cooking in the oven. We'll see if we can get some kind of breakout into year's end for crypto. But it's been a struggling story here recently. We'll keep an eye on that. Chris, we can switch over and see what you got now.
Sure. So I'm looking at relative strength on a weekly time frame. We have had just a couple of readings higher on silver in history, and it was the previous all-time highs back in 2011. We had an RSI reading around 88. Currently, we are getting what I'm seeing, and again, this is like kind of anticipating a bit of a top, not calling the top, but we have had levels of 87. We have another level here after that pullback. We're currently trading around 85 to 86. This could go a little bit higher. One thing I'd be looking for is if we go a little bit higher and this RSI pokes higher, that's fine. I mean, that is actually a good indication that momentum and price are still supporting each other. But if we see that we make new highs and this all of a sudden turns, this is my relative strength in the bottom where my mouse is. If we have RSI turn a little bit lower, there's some hidden bearish divergence here at the top. So sooner, I mean, I would say within the next 30 days, Nick, we probably see things start to at least stall. The only issue that I have with this is a chart that looks like this. A chart that looks like this. This is a low to high of 121% since April, dude. I mean, silver's trading like a meme stock, man. It's trading like all the stuff that happened during Liberation Day, and it is no different than all the quantum computing and all the AI stuff that ripped this year. Now silver's doing that. So, I mean, these don't end well. Just expect volatility. That's all. I mean, typically this doesn't go sideways and have like a nice distribution. It's like it goes straight up, pops, and then comes straight down. Usually commodities react in that way where they don't have V. They have V tops. Like they just sharply just correct. Like we saw here when it dropped 16%, that came out of nowhere, right? It was overstretched, but it just happened quickly. I would expect it to kind of behave the same way. It's like when this is done, I don't know what spot price that is. I don't really care, but it'll drop. And I'm waiting to scoop it up when it does.
Yeah, I'm trying to remember. Coffee futures did that too, right? I don't even know what the
coffee futures did that. Cocoa futures did that.
Coffee. I'm not a futures trader.
CF should be coffee. Cocoa should be CCC. Let me see if I can go cocoa futures. Some of these have been repriced where you don't really see. Yeah, look this. I've got look at CC1. That's cocoa futures. Yeah, that's my chart. This is the type of stuff I'm talking about. Like this is 4,000 straight up for 190%. Feels great until it doesn't, and then we have a drop of 40% in literally 2 weeks.
Chris, do you trade commodities like that?
Do you trade when this was happening,
copper or things like that?
Yeah. So with Tasty, kind of my all-in-one platform. No, like I could trade. I can trade gold, silver futures, copper futures, oil, but I couldn't trade. I don't think they have let me see if they have a CC. I don't think I had a cocoa feed for this one because I did want to trade cocoa. There's two spots I wanted to trade at. One was the 61%. So if you can see this rip up, when this fell back to a 61%, I wanted to get long cocoa futures, but it would have been open up a new account, trade futures, totally separate stuff. And I'm like, all right, whatever. And then the other trade was shorting it again at the double top. So looking for this level to be, and again, I would have traded futures options. That's a lot easier than trying to like pin the exact price entry level, because you can see that we test the 61 1 2 3 4 5 6 7 times and make lows the whole time that are lower. That's where people get chopped up, and it's like I just got to turn at the fib. Well, you get chopped up there with like 5 or 6 tests, and then the same thing at the top. If you're trying to sell that top, you have another move that's probably 5 or 10% higher. Yeah, I mean it went 10% higher than the previous high, and yet that was the top. So that's why I trade options, man, because like you can eliminate a lot of that crazy price action noise and just be right over time.
Yep, makes sense. And also, if we could show my screen really quick, I want to follow up something we were talking about yesterday. This level in euro dollar looking pretty good. A little bit of a pop here. Dollar weakness showing up on the screens, at least for now. You've got euro dollar above this area. Transparently, I'd be looking for buys if we can get a pullback into that area. I know, Chris, we talked about this longer term. I think dollar strength in a bigger picture is still something that is reasonable to look into. But for now, I think there's some shorter term trades that I'm interested in terms of trying to fade the dollar lower. Interestingly, this is the first time in a while. This is worth noting. It's the first time in a while where we've had a Fed meeting where the takeaway was actually dollar weakness. I say that because the last few times you've had expectations. I mean, this is just markets 101. Check this out. We expected a dovish Fed. We got a hawkish Fed. We expected a dovish Fed. We got a hawkish Fed. So this theme, this time though, lo and behold, we expect a hawkish Fed. We get a dovish Fed. Markets just love to play gotcha, man. They really do. But anyways, this is the first time in a while that I think we've had some dollar follow through to the downside following a Fed meet. We are coming into some support here, so I'm curious to see if you get some kind of a bounce on the dollar. But I do think it's an interesting story going into 2026. I think that the story around currencies has heated up again because you have something going on with the Bank of Japan, as always, but you have the dollar really kind of being tested here. You've got a new Fed chair that's expected to be very dovish. You've got, I still kind of follow through with what I was saying yesterday, Chris. I think the current Fed team is going to maybe try and front run the ideas of a potential Kevin Hassett. I think they're going to take that and say that's our decision, not yours type of moment.
Sure.
It just from an antics play. I also think that the jobs market and weakness that we talked about yesterday in the economy that's not the Mag 7 is still very real as well. So we'll see what happens next with all that.
And also yesterday's dissent, I didn't really make anything of it, but 9-3 votes for the rate cut yesterday. That dissent was like the highest dissent since like 1988, which I was really surprised. Usually we've had like one dissent or two, but like having three, it was a 9-3 vote yesterday. We haven't had that many dissents since like the 80s. So again, kind of to your point, I mean, things are getting shaken up a little bit in the Fed. But whatever majority there is, let's like you said, put a united front. Let's get this stuff going before everything gets really, really wild and crazy. And you know, it's not like Powell just like steps away forever. It's like he's still technically a member of the Fed.
Yep.
And on the governing board for years to come. I think it's till like 2028 or 2029. Like he can be on there for several more years.
Do you know if he still has the, like, does he become a voter at any point on decisions?
I'm not entirely sure.
I'm not
I don't know. I think it's going to be, I mean, if look, there's 12 members and that's 12 very powerful positions that everyone argues is probably way too much power for any one or group of 12 to have. Especially when they don't necessarily get it right all the time.
Sure.
But I don't know, man. I mean, I sent you that message yesterday. It's like, are we going to see a replay of like 2021, 2022, where we're going to see some tariff dividend checks that are handed out? I mean, how do you not have like a replay of like high inflation again if you're going to have every household, you know, pulling like $2,000 to $3,000?
Sure.
You know, I don't know how that would be a good thing. I don't know. And at all-time highs, and you got a dovish Fed on top of that versus a hawkish Fed with a crazy. It's like I don't know if we are just going to price our way into a bubble that ends very, very badly at some point, or if we need like another ventilation in 2026 first to get the market down 10, 15, 20%, and then buy the dip aggressively again and run it hot into midterms. But I think, you know, just like this year, it's like the left and right tails. I'm curious, like once the year end comes, like where are kind of the big picture outlooks? Because I would say, okay, here's your kind of standard distribution of gains, but it wouldn't surprise me that, okay, here's a standard deviation. I would suspect that like the estimated like fat tails again of like, well, we could have, you know, 5 to 10, 15% on the upside. And I think if we're lucky, we would, you know, double that. But it's like, I just think that left tail risk of 30% lingers, you know, it could be 30 to 50% lingers. I don't know, man. I don't think that happens necessarily, but it's going to feel like it could happen at any moment. That's the weird part about, I think, going into 2026 is there's still a lot riding on it. It's never a lack of noise. I think if I heard this session yesterday, I was going to ask you, like, we could talk about this more at the end of the year, but I mean, do you have like a quick highlight of some takeaways of 2025? Just like, what'd you do well? What were you surprised with 2025? I think there's so many things that come up in my head.
Yeah. So for me, I mean, you know my style well, Chris, and the audience probably does too. I am a momentum trend following trader. Yep. And that is lovely and easy to say in a market year like 2025. Like 2025 for me has been a good year.
Yep.
However, 2022, awful year. Like this is a really hard thing to wrap anyone's head around, even after doing this for me for 10 years. A whole factor, let's call factors momentum trading, premium collection, quality, dividends. Like there's so many different strategies. None of them are right. None of them are wrong. But there are years where it does not matter what you choose. You can choose to say I'm a trend trader, or you know, I follow momentum, which is in 2025 has been really solid for me. I've had a good year. I'm up, I think, 27% versus the S&P 500's. What, I don't know, what is it, 17? Yeah. So I've had a good year, in terms of overall relative performance to the S&P 500. But it depends which portfolio, because I have other accounts where I've not had such a good year, where I'm not such a trend follower and aggressive. But I would say the primary thing that I do is I'm a momentum trend follower. I pretty much caught this reversal here from the lows and rode that shift in momentum when it started breaking out to the upside. And that's where I'd say I've done well this year. Maybe where I have not done as well is I still stuck to some of the ideas despite what the market was telling me of looking for that broadening out theme. I don't think I played the international stocks breakout as well as I would have liked to.
Right.
That was a great call that, we had talked about it many times, but I didn't actually jump on that. I stayed, tech stocks, US tech stocks are the best. And that ended up being right in the end. But on a relative performance, I probably could have squeezed out a couple percentage points better if I was watching with a more open mind to broader markets. There were some things that went absolutely, bonkers to the upside this year that, I could have played better. So, some pros, some cons. And the thing I'll wrap up with is I had a good year this year, but if I draw back the curtain a couple years, there's been some not as great years with the same style of trading. And that's something that's hard for traders to wrap their head around is choose your strategy, whether it's, again, whatever it is, and understand that you're going to have years that are better than others. And trading and investing is not a 6-month journey. It's a 20-year journey, 30-year journey. It's there's a lot of good years and bad years that can come your way. What about you, Chris?
Well, I mentioned the word noise. That's probably the biggest thing for 2025 is just, the markets kind of had to settle back into Donald Trump being president and saying a lot of things, doing a lot of things. And then, after he keeps saying and keeps doing, the market's like a little bit more desensitized to it. I think that the leading with Doge, leading with austerity was a very different tone that the market's like, oh crap, he's serious about this. And then of course it pivoted very hard. And now I don't think that narrative comes back. I don't think that Trump and company will do anything of the sorts of, trying to trim deficits or trying to, balance the budget. I think that now at this point, it's like, here's how we run the economy hot. Here's how we're going to run the economy hot. We're all about growth. The trade war stuff and tariff stuff might still linger in the background. I think what the market's going to have to pay the most attention to is going to be earnings. We talked about this a lot yesterday. Valuations are very high. We're in the top 1 percentile of all earnings valuations. And that does, it doesn't mean we can't go higher. So it's silly to call the top, but it also means that we can't expect this. Like we can't even if this year finishes we're at 16.66 S&P for year-to-date returns. Even if we stay there, even if we creep up towards 20 for the year, that's 3 stellar years back to back to back. Another year on top of that, could happen. But then I think you and I have the conversation like this is a lot like the late 90s. So having this many years stacked on top of each other with 20+% or close to 20% returns, I think we're going to have one like ugly, and it could be 2022 worse, like 2022 faster, 2022 instead of peak to trough of 30%, it could be 40 to 50%.
It would be worse than 22 faster would be 22 slower. That would actually be worse.
Actually, that's very true. To just have like, let's say 2 to 5 years of just like 2022. Yeah.
If
exactly.
You had a
lower
long,
highs, lower
drawn
lows.
out bear market, that hurts because time has value to it, right? Like if you saw a slow, grindy, actually, I'll say this, if you had a stock market, this is why I love trend following personally, moving averages like you've got on your screen right there. If you truly break the stack there and everything there flips bearish and it's actually staying there, that's an environment where it's like, oh, you have a bit of a paradigm shift here. We're not in this snapback market anymore. Like let's call your moving averages that you were just showing. Like I've got a couple of my own. If the rubber band truly breaks, like for example, we had the start of something like that in April of this year, but we snapped back because again, we saw a lot of the unwind of like the Trump administration was like, oh, actually, I don't want that smoke. We're gonna
Right.
undo that, not walk it back. So the market kind of got saved and also beaten down by those worries, right?
Right.
But look at the moving averages here. I know this is like really elementary, rudimentary stuff, but you started to see the rubber band get stretched and it snapped back. If you had seen a couple more months of that uncertainty, I think flows would have actually flipped into, okay, this market is not snapping back.
Yeah.
So if you see these moving averages like do this, again, it's the most rudimentary thing ever, but I think the wealth effect starts to materially come into play. You have funds who start to pick up on, okay, momentum is dead, we're out of there. Growth investors are like, we're at high valuations, get out of there. I think that's a bigger threat, is if you were to actually see a slow market rollover. We just haven't had one in years, Chris. We haven't had a downtrending momentum market in a very long time. A little bit of that action in 2022. That wasn't a short snapback.
No, that was 10 months, man. That was
750 days to get back to break even. I mean, that's
so a 2-year drawdown, but it was like a 10-month peak to trough, but like a two-year
Yes.
drawdown for the all-time highs. Yeah.
Yeah. So I think those are more painful, to be completely honest. And just to unwind or pull back the curtain further, a lot of the names that people were buying in 2021, those guys didn't see 30% drawdowns. They saw 70, 80% drawdowns.
Meta.
Shopify, Spotify,
Your Mag 7s
Carvana,
had 40 to 70% drawdowns. Mag 7.
Palantir. That's a real market sell-off.
Yep.
So,
Yeah, those are great points. That would be a really nasty environment for sure. I don't know. I part of me is just like, we're silly to think that this market wants to go down, but I don't know. It's funny because I consume so much content like over the weekends or at the gym, where it's like I'm trying to keep like multiple perspectives and opinions rolling, where it's like, yeah, I've got some pretty like bearish people, I've got some pretty bullish people that I listen to. I'm trying to form my own opinions. I'm looking at the charts and doing this stuff every single day. But the only positives that I see out there, it's the AI narrative stays together. Yes, we are having a more accommodative Fed, as illustrated yesterday. Yes, we have fiscal dominance, as illustrated by this year's big pivot, not just in the U.S. The U.S. has been doing fiscal dominance for now 5 years. Like the Biden administration did it. Now the Trump administration picked up after Doge, doing the same thing.
Yep.
But now you have the world doing it. China's doing it. Eurozone's doing it. Like the international plays, like you had said international. I mean, the SCHY is one of the ETFs that I trade. This is a Schwab international ETF that has some Europe exposure, Asia exposure. This is up 31% year to date. Now there are ETFs in individual countries, like all the Europe pigs, like Portugal, Italy, Spain, Greece. They were up like 60, 70%. Some wild and crazy. Like I'd never trade them. I'd never trade those ETFs, but like individually, because they're not as liquid. But yeah, a country's ETF did. It's been underperforming for a decade, and it's like, oh, it's up 60%. The Argentina, up 30, 40, 50, 60% this year, which is fine, whatever.
That's what I mean, Chris, when I said earlier about
it's a rent. You don't play those permanently, dude. That's a renting trade to me. It's like it's 6 to 12 months, not a forever stock.
That's what I was saying earlier about like one of the things I feel that I could have done better in 2025 is, okay, I am a true momentum trader, but where I've not done the peak is truly spotting out some of the best momentum plays that have, the best momentum plays were not the U.S. stock market this year. As you've just pointed out, you've had some, I would agree, they are rentable spaces, but, on the trading side of what I do, it's all about renting. It's all about, I'm with what's happening now and I'm out of there when it's gone. And again, it's not the only strategy. Like that looks really good this year. And I fully acknowledge that next year, momentum could be in the gutter. Next year could be all about quality. It could be all about, dividend paying companies that are flat on the year while the NASDAQ's down 30. Like that can happen. That's what happened. I mean, dividend stocks were down in 2022 also, but they were down a lot less than tech stocks, and especially speculative tech stocks, down 50+%, while the Dow Jones, I think, had like a 20% drawdown of something way more reasonable.
Yeah. So I was doing some math last night, and I know that the premiums on SPY or QQQs are not always this solid, but basically here are my thoughts for Here's an investment thought for me in 2026. At any given time, I've raised enough capital here that I do want to price out the math for hedges. I think I have to have at least like 6-month, 12-month hedges. I need to have some exposure to VIX longs and volatility longs. But if I did like a 1 to 2 week covered call and I just do it at the money, so I buy shares of the SPY at 687. And I don't care if it goes higher or lower, but this would be a cash setback of about $68,750. So there. Okay. Now of that, I could buy the shares right now, sell an at the money covered call, collect about $5.85. So 585, and this is over a 8-day period. So let's just say like I can do this, 45 to 50 times next year. Now the numbers will fluctuate based on volatility, but our VIX is at like 15 and change. So it's not like crazy high volatility where this premium is off the charts. So 585, let's say I can get this flipped, 40 times next year and generate that on that return of, and again, I'm ballparking, but it's like I could probably with covered calls alone generate close to like 20 to 30% off of the S&P. Now, this serves two purposes. One is I can lower my cost basis that much to hopefully stay ahead of any type of correction that the market brings, which is also why I'd rather have hedges in the background, because my hedges would serve as, like aggressive ways to lower my cost basis. If we have, 10, 15, 20% corrections, I use hedges for those like lowering cost basis, and I continue to just chip away at kind of covered calls and income trades here. So to not make this really complex, I just think that a nothing year where the market look, we either blow the top off and the wall of worry and the risk is to the upside. That's what 2026 is to me, or we are going to fight tooth and nail to not go down, but just struggle at this 1 percentile of earnings to just, we can't keep performing at this high level. And the market's like, it won't go down, it won't go up. And it's just going to be a chop fest in 2026 because we keep looking back. It's like, how many years have we had nothing but direction? Like,
yep.
Dude, literally for the last like decade until like 2015, 2016 was the last range we had. Every other year has been straight up into a melt up into a break, and then V bottom and melt up again until a break. Unless those cycles continue, I mean, maybe we just don't have a new normal, but sideways hasn't happened in over a decade. So I could see sideways a lot in 2026, maybe, those plus or minuses like 5 and 10%, but just struggling to really give us one clear trade or one clear direction. And like, I throw that to you because you do a great job of taking trades, riding momentum, trailing stop losses. Like, what do you do in an environment that's not what's happening? What do you do when like you see that the market's just hitting highs and lows into the same like 5 or 10% range levels? What do you do?
So that's the thing is, as what I love about momentum trading is that it is you're following, right? Like truly by definition, if you're following trend, you are agnostic to the idea that, okay, many research points out there have found, and I encourage listeners to go look this up. Momentum is a real thing in markets. What has gone up tends to keep going. However, it cuts both ways. If this thing starts to break, I get cash heavy. I switch into defensive stuff. TLT. I watch. If for example TLT blows out to the upside, look, I'm looking to get long TLT. I'm agnostic to them in terms of price action to what's happening. I cut out of trades that start to no longer work. And again, that's where I say, there's different schools of thought. Some people say, oh, well, you're cutting it out just as when it's getting into a better pricing point. And there's different styles, right? So like, and I should also mention, Chris, we've talked about this before, but I have a bellwether approach in my own, across my portfolio. My momentum trading strategy and portfolio is one, but then I have like dividend stuff and yield collection that I do through selling puts and calls. So I have a little bit of a portfolio bend, one that's way defensive and one that's, a little bit more aggressive in terms of its following price. I still don't use, high position size, but just something to mention there. So.
Yeah. Well, I mean, as always, like we got to survive. Whatever happens, up, down, sideways, man, we got to figure it out.
That's right. Got to follow along. Chris, we are, I know we're coming to the end of our segment here. We've got, I think we've got another guest supposed to be coming up next, but I'll let you run because I know you got to get to your next show. And it's been a good week, man, talking to you all about what's going on in these markets.
Yeah. Happy to be here, and see you soon.
All right. See ya.
Thanks.
All right, guys. And I have got to run to do this podcast, James. I don't want to keep Johnny waiting here on the podcast side of things. Do we have Miko coming on? If any of my streaming friends who take over the show, we're supposed to have Miko at 9, want to jump in last second, that would be awesome. Sorry, just checking the back end here. Yeah, I've got to run to do a podcast. He's on like a 10-minute timer. So let's see. What we'll do here, guys, is we're just going to run a quick break in just a second. And if someone shows up, excellent. If it doesn't, we'll just stop the stream and bring on the next guest. I think that's the best way to approach it. But anyways, guys, before I head out, remember, check out the Edge Finder. It is currently on super discount for our holiday sale. We'll drop the link here in the chat if you want to set up a payment plan, get access to it. Don't miss it. It's on super sale right now for our holiday discounts. With that said, I'm going to hop out, guys, and I will see you guys next time. And see you guys. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now, if you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Sorry guys, I'm running a little bit behind, still setting up. Hope everyone's well, just loading up the terminal. You know how it goes. Of course, got to have the Edge Finder up if we are looking at some trades. How's everyone doing? Happy Thursday. Excuse me. Sluggy, hello. Jaylene, hello. Ball out, good to see you all. Hope everyone's good. So what's going on today? Shirls, hello. Slightly dovish tone from the Fed yesterday. I do believe that Nick and Chris went through it with you. I know Nick was on before me as well, so I won't go into it because I'm sure you guys have heard all about it. Looking for Swiss sell setups. Yeah, my pound Swiss position is starting to look a little bit better. On the other hand, some of my other positions are looking a little bit dead in the water. So Aussie New Zealand's reversed. Dollar CAD's obviously coming to the downside. Pound CAD's doing okay. Euro pounds at entry. Silver's doing all right, and the S&P is doing okay. But overall, it's looking like a bit of a red period going into Christmas Day, but it's all right. Ball out says DXY to 95, definitely possible. DXY looks very strong to the downside. Yes, definitely seeing some selling pressure with the dollar today. It's not a huge surprise. Yeah, I mean, it is what it is. So EUR CAD shorts or Euro CAD shorts. Let's have a look. I've not paid any attention to Euro CAD recently. Is there anything on the Edge Finder? Let's just get rid of neutral. Not saying anything specific here. Let's check eco or economics. Eurocad's actually getting a bullish reading, Sluggy. So Eurocad, you may be on the wrong side. So let's have a look at a possible long setup. So technically, looks okay to go short, to be honest with you. We do have quite a nice level of structure through here. Obviously, these previous lows looking for break and retest. Makes sense. We do have a bearish trend as well. So technically, yes, shorts are kind of valid, actually. But, you know, I don't go against the Edge Finder if it's giving me the opposite reading. So if I was to be a buyer of this market, I would need to see a new high form, a higher low. I'd need to see these moving averages cross into a bullish trend, and then I could execute on sort of the next pullback towards that level. But yeah, for now, shorts do look quite nice. But again, if they're not fundamentally backed on the Edge Finder, then I'm going to stay away from that. What's going on with US oil? I'm not sure. Let's see what is going on with oil. Yeah, oil's taking a bit of a hit as well. It's not a huge surprise. I mean, downside is being dominated at the moment. Hold on, let me just see what's going on. Can gold puts to call? Do you mean you want to see the put to call on gold? Yeah. Where is it? We need crowd sentiment and put to call. Let's see. Let's see what gold is doing. It's actually not doing that much of interest. We're heading towards high put volume, which does lead to a more bearish sentiment. But I'm going to be honest, with gold, I'm not going to take that too seriously. We could see a minor pullback. However, I'm a big advocate for metal, specifically gold and silver, to continue to the upside. I actually put a video out this morning discussing silver in a bit more detail and explaining my positioning on silver. But yeah, I think in terms of gold, if you want to be contrarian, you would obviously want to avoid buying if we have high put volume, and then wait until we get the opposite signal. Obviously, basically like you would do with retail sentiment. In fact, exactly like you would do with that, just counter trade it. Eurocad is a weekly play. Stops are according to the accordingly above the weekly highs. Fair enough, Slug. If you've got your own reason for the position, then who am I to say it's a good or bad idea? Not my business. Eurodollar smashing. Yes, I know Eurodollar's having a fantastic ride. It's also a bullish reading on the Edge Finder. So anyone that did catch, oh, actually, is it? Not anymore. Eurodollar is it in eco mode? Let's just see. Eurodollar seems to have dropped off actually a little bit. I could have sworn it was much higher. But either way, if you caught the Eurodollar longs, massive congratulations. Since Jay Powell kept saying, let's wait and see, does that mean next week's CPI will be more impactful? Not necessarily. Powell is notorious. He's known for his cautious approach, basically being cautious, wait and see. So the markets kind of expect it from him. I wouldn't say that the next CPI is going to be more impactful or more significant than the previous one, but it will obviously have an effect, and it does play into that forward guidance role of, you know, whatever Jay Powell said about inflation, and then we need to match that to what does come out of inflation, and then we can start building that idea of, okay, the Fed will do this or the Fed will do that, or like maybe not obviously definitive, but it feeds into that sort of mechanism. Major banks predict Eurodollar to reach 1.24. Yes, Tatienda, I do think that's absolutely possible. How come we had a cut and we're still going sideways? I don't think the dollar is going sideways, is it? Let's just see. US dollar. Yeah, I mean, I wouldn't really call that sideways. I mean, if you want to look at it on the monthly, then I suppose maybe you could consider it sideways. But yeah, I'm not sure who would. I'm not sure who would be looking at this and saying it's sideways. Made 2% a day. Fantastic. That's great to hear. What's my thoughts on lean hog? Okay, Bola, we're not doing that today. It's too close to Christmas. I'm not entertaining. Yeah, if you see USD going sideways, you're in denial. Yeah, I mean, I'm not sure you'd be in denial. I think that's more you've got some eyesight problems. Not dollar, I meant NAS. Okay, we'll have a look at NAS shortly. Pound New Zealand shorts played out nicely. Fantastic, Sluggy. That's good to hear. Yeah, I mean, I'm still very bearish on the sterling. The whole, in fact, well, not every pound asset, but things like pound Swiss, pound CAD. I am very bearish on things like pound dollar, pound yen. Not necessarily. I still do think they have upside. Specifically, you know, we've got the weak dollar. So yeah, I think we could see pound dollar to continue to the upside. We could see pound yen continue to the upside. Even though the Bank of Japan is expected to hike rates, you know, it's still going to be a funding currency. Their rates will still be very low compared to other major currencies and economies. Gold is very, very bullish. I have the same thought, but pullback. Yeah, okay, let's have a look at gold in a second then. Do you think gold still? Yeah, all right, let's pull gold up then. Bear with me. Yeah, I mean, gold actually is sideways, really. However, I would expect it to continue higher from here. We might see short-term pullbacks, you know, on the 30-minute, the H1, maybe the H4 as well. But overall, I would expect gold to continue higher to the rest of, to the end of this year, at least. That's a very, very pessimistic view. I could see it continuing to run for a significant period of time, at least into these previous highs towards 4,370. I think is completely reasonable. Beyond that, we might see some profit taking. Obviously, it depends on what the landscape is at that time. But I would expect some profit taking at these highs if we do get there. And then a continuation to the upside, break and retest, so on. So I would expect something a little bit like this. So obviously we've double topped here. Oops, that's not right. Double topped here. And then we saw a large profit taking move. There wasn't any fundamental reason for that at that time. So I would expect us to come back up, have a little bit of a profit taking dip, then break, retest, and continue higher. On this retest, I would be looking to be a buyer. However, I've said that on gold for the past year and a half, 2 years, and I have continued to continued failing to get an entry, which is really unfortunate. 12 months sideways. 12 months time frame. Yes, it's sideways. Yeah. Why euro dollar can fall? It could fall for a number of reasons. It could be a mean reversion. It could be a flip in data. It could be a lot of different things. But I think long term, or well, not long term, I think the trend for euro dollar is to 1.2. However, obviously within that move, we can expect pullbacks and general market mechanics and behaviors come into play. Just because euro dollar is fundamentally bullish, it doesn't mean it's going to rocket to 1.2 with, you know, no downside at all. I wish that's the way it worked, but unfortunately not. What's your thoughts on the fact that Forex sucks and it's the worst instrument to trade? Well, I think it's all subjective. I think it's personal. For me, it's the best asset to trade because I don't know anything about futures. I don't know anything about options. I don't know anything about stocks. So what can I do other than really trade Forex and metals and some indices? Well, nothing really. So I think it's all subjective, but I think there is obviously the fact that, is it futures that don't have spreads or something? I'm not 100% sure. So there are certain upsides, but I think there's also downsides to each thing. From where to short euro dollar? You know what? Normally I would make a joke like go full margin over Christmas, but because it's Christmas, I don't want you to take that seriously and lose all your money to the markets. So I'll be nice and tell you to don't sell euro dollar. To be honest, if you're coming into a stream to ask if you should sell, you should probably aren't ready to be placing positions in live markets yet. I do have a position on euro dollar. I am actually short euro dollar after saying that, but after that question, I'm a little bit hesitant to show it. So I might show it towards the end of the stream. But yes, I am building up a DCA short euro dollar mean reversion, not a fundamental play. Bullout says, yeah, I see 1.2. Don't take aim at the little wiggles inside for 20 pips, counter trend. Well, that's exactly what I'm doing, Bullout. So I can't say that's wrong. Or I can't say it's right. James, is 6% a month good? Yes, 6%. If you could do 6% every month, well, not every month. If you could do 6% on average every month, you would be one of the best traders on the planet, to be quite honest with you. You've also got to take into account what you're actually trading, because it's much easier, or not much easier, it's the wrong way. I think it's, I can't think of a better word. I'm going to say easier, but don't take that literally, to make higher percentages with things like options. But again, I don't really understand that world, so I could be wrong. But yeah, if you are trading FX on a CFD broker, 6% a month is very, very good. But whether you stop loss euro dollar CAD, sad times. If you can do 6%, you're doing fantastic. But I wouldn't expect that as a normal. I'd say 6%. If you are an average normal trader, 6% should be like an amazing or a very, very good month for you. But I wouldn't be expecting that every month. I appreciate the answer, but if you move to weekly time frame, it gives a sign of bearish. Code, I'm not sure what you refer. Hold on. It gives a sign of bearish, but if we take a look at the monthly time frame, it closes doji next month, should fall closest 4K. Oh, you talked about gold. Interesting. If you're not making 277% per month, you're failing. That is big facts, Josh. Yeah, very, very true. If you can't double your account at least every month, there's no point being a trader. Sorry, I was reading a message. Okay, so what else do we have? What can we look at? So NASDAQ is getting a bullish reading. Not really surprised there. We did obviously just have the rate cuts and a dovish lean on the Fed or from the Fed. So yeah, NASDAQ, S&P, Russell, all seem like good plays in my opinion to the long side. I am already in the S&P that I showed you at the start of the stream. So I'm planning to hold that at least through the rest of December. Obviously, it really depends on how the markets go. But that is the plan, is to hold it through December into early January. Euro yen looks good. The problem with the yen pairs is I'm just waiting for a pullback. Obviously, we do have that Bank of Japan rate hike and normalization. So I just want to wait until that happens and see exactly what's said and what the situation is with that. Aussie US dollar seems great. Actually, I think Aussie US dollar could be one of the best trades going into next year. And when I'm saying that, I don't mean like a long-term whole 12-month play. I just mean I think it could be a good play into the start of next year. Let me get rid of these. So here, unfortunately, it's been very, very tricky to try and find an entry on Aussie US dollar just because we're not seeing any reasonable pullbacks. I think the only place I could have gotten in was here, and unfortunately, I missed it. This trend has just been so aggressive with, one measly pullback since the whole of this trend started, which is unfortunate because I've been watching it for a while. Just can't do anything. So I would love to see a rejection at its previous high, which we have actually seen, but I'd like to see a deeper rejection to come slightly lower and ideally get an entry there. Which traders do you follow and found helpful? That's a good question. So Nick was a great one. So I didn't really pay any attention to social media, the social media side of trading until pretty much COVID. Really, that's when I was, on YouTube a bit more, watching more content. That's why I stumbled across Nick. To be honest, I don't really watch anyone else just because I don't like to pay attention to what other traders are doing or saying because there's just no need. I'm not going to learn anything from the majority of people on social media. I think Sam KB is quite a good one as well. If you are more of a, what's it called, like statistical trader, I think he's quite cool. I genuinely couldn't really tell you anymore. These prop firms expect me to take to make 10% or more. You know what? That's how I know that you are a new trader. That I don't mean that as an insult, but back in the day, it was pretty much just FTMO. I think there was a couple of others, but FTMO was and still is like the biggest player. But what you used to have to do was make 10% in, I think it was 30 days. It might have even been 25 days. I can't remember, but there was a very, very small time limit. And it was next to impossible, unless you were going very high lever or very high risk, it was almost impossible to do it on in a systemized way. So, now you could get a prop account and you could take your time. You could spend 6 months on it if you wanted. But yeah, back then you'd had 30 days and that was it. If you didn't make 10%, you were done. And that was $1,500 down the drain or however much they cost. Do you think we'll get intervention on the yen next year? Yeah, to be honest, it wouldn't surprise me if we get an intervention from next week to the end of December, first week of January, within that window of time. Just because it's common knowledge that they like to intervene in low liquidity periods, and Christmas is one of the lowest liquidity periods in the markets. So whether they will do that or not, I don't know. How's New Zealand US dollar looking? Let's take a look. I'm fairly sure that one is on the Edge Finder as a bullish reading, if I'm not mistaken. Yeah, so we've got a bullish reading with a score of 7 on the New Zealand US dollar. It's very similar to Aussie US dollar in terms of I'm finding it very difficult to really get an entry here just because the trend has just been so aggressive. There's been no meaningful pullbacks. What we do have, which is a good sign, is this moving average cross, just indicating that the trend has changed and buyers are now fully in control. So I would be looking for a pullback, whether it's just down to these lows, back to 200, whatever it may be, just some sort of move to the downside, which would then allow me to get into a long position, would be completely fine. But yeah, as things stand right now, I can't get in. Prices move too far. Entering here, in my view, would be more of an emotional play rather than being on a plan or a strategy. Yeah, it was impossible. My funded FX changed the game. Was it them who did that? I can't remember. But yeah, I know someone did it, and every other prop firm followed suit, which was good. I mean, I would say that was one of the best changes to happen to the prop firm space, like 100%. MFF might be returning. I hope so. I've got a 200k account with them. It's the only account, or one of the only accounts I've ever had with a prop firm. Just I think I've had 2 or 3 others. But yeah, that I bought it, and 2 or 3 days later they disappeared. I was like, that was really unfortunate. Should I put my prop profits in a live account? Yeah. I mean, if you return money with a prop, what I would say, and this is obviously depend on your current situation, but if you make, I don't know, let's say 10,000 profit, and that's what you withdraw, you get 10,000 to your bank account, then you could put 2, 3, 4,000, maybe even 5,000, so 50% of it into a live trading account and leave the rest as a reserve. I want to say a reserve, it's just to put into other things. It could be a long-term investment portfolio, it could be a retirement account, it could be just to pay bills. I wouldn't put all of it 100% into a trading account unless you don't need the money. Because what you don't want to do is get into a situation where you end up trading out of desperation. Let's say you put all of the profits into a live account, something happens, your broker goes bye-bye, or you blow the account, something happens, then you've got nothing left. I would say having a cash reserve is always good, or at least some sort of diversity in where your capital is. Do you think Eurodollar is going to pull back on the New York Open? Very possible. Do you use leverage when trading? I do use leverage, yes, but very small. I think IG's is like 1 to 20. It's very small. I'm not sure what it is actually off the top of my head. I know it's below 1 to 50. But yeah, I think we spoke about this actually on one of the previous streams. Leverage is a very, very good tool as long as you know how to use it. So you need to use it as a tool and not as a gambling gambling trick. So, if you've got $100, then fine, use 1 to 500. That's I mean, you're probably going to blow your account, but 1 to 500 would work. But if you've got 10, 20, 50,000 and upwards, you don't really need more than 1 to 50 at max, because at that point all it's going to do is limit how many trades you can place, because the risk is fine in terms of the monetary aspect, if that makes sense. I'm not sure if any of those words actually got across my point, but there you go. Looked into IG, has more fees than trading 2 on 2. Well, trading 2 on 2 isn't for active trading, it's for investing as far as I'm aware. But yeah, overnight funding is a little bit expensive, which is why I don't like to hold trades with negative swaps, because that just adds on extra costs. CAD Swiss looks great technically. CAD Swiss, let's have a look. Where is... Oh, right, I'm on it. There we go. It does, actually. It does look quite nice for possible long. We're coming into... Actually, yeah, interesting. I need to do a bit of research on this one, but technically looks pretty good. So we've got a bullish trend. Prices pulling into previous structure. So this is setting up a really nice break and retest into this level. 200 moving average could also catch up. So that could be like a nice little confluence. Look for a rejection here to continue to the upside. So yes, an entry around 5760 could be a nice little play to take. Do we have anything here? We do not. Yeah, CAD Swiss isn't here, which is a bit disappointing actually, but there you go. I always close winning trades early. What should I do? Get off the charts. There isn't like anything I can tell you to fix that. It's one of those things that you will have to get over, and it will come in time. You know, I think every trader goes there where it's like, I've got $100 profit, I'm going to close a trade, or I just lost $50 and this trade's in profit by $45. I'll close it to cover the loss. Those things are all failing ways to trade. You will never succeed if that's the way you do it. But it is a natural part of becoming a trader, because that's just how the human mind works. So what you should also do is look at your strategy from basically a robotic point of view. So if your backtest says you've got, I don't know, let's say a 52% win rate and your R&R is always 1 to 2, you know that you will be profitable if you just continue to do the same thing. So a lot of the times when you struggle with things like holding trades or hitting stop losses, it's either because you've risked too much and you can't afford it, or it's because you don't understand what your strategy should be doing and what to expect from that strategy. All of these psychological things like FOMO and greed and whatever else, all are just symptoms from not understanding what you're doing fully. It would also help, hedge my pound Swiss shorts. The thing is that, yeah, I mean, that's true, but I'm not sure I'd want to hedge my pound Swiss shorts, actually. I am very confident. Obviously, I'm not saying it would 100% work, but I'm very confident that it will continue lower. I mean, it's looking completely fine so far. You know, it's allowed me to do what I wanted to do, which is enter the market, get some drawdown to then layer in some extra positions, and now it's starting to move down. And my economic my economic thesis for this market is that we will continue to move down throughout 2026. So in terms of, you know, whatever it does short term, I don't really care. It's just, you know, one of those things. Bit disappointed about dollar CAD, but it was one of those trades where it's like, you know what? There's a very high chance it will get stopped out, but the risk is asymmetric. So this is the euro dollar position I was telling you guys about. That I was hesitant to show you, because what I don't want someone to do here is look at this and say, James is short euro dollar, I'm going to short euro dollar. Please don't do that, because what I'm doing here is basically what I've done with pound Swiss, what I'm doing with silver, and also what I'm doing with the S&P. The idea behind euro dollar shorts here isn't a macro play. This isn't based on fundamentals. This is a mean reversion strategy. So all I'm doing is looking for price to come back down, revert this move, and that's it. Then I'll get out and take my profits. I view this market as overextended and overbought, if you will, if you want to use those terms. And I'm expecting it to continue lower. If it doesn't, fine, I'll take a small loss, no issue. So yeah, that's the euro dollar trade. So you've got all of my positions. I'm short euro dollar, long euro pound, long silver, long Aussie New Zealand, short pound Swiss, and long on the S&P. But yeah, that's all I've got going on right now. And my time is coming to an end in about 1 minute, so I'm not sure who's on after me. Let me just double check so I can throw it over to them when the time comes. I think it's Marco after me. I could be wrong, but I'm fairly sure it is. Anyway, guys, this is my last stream for the year. You will not see me now until 2026. So I hope you all enjoy your Christmases. I hope Santa brings everything you want and everything you wish for. In my case, I've asked for $1 million deposit into my account. That would be just lovely, but something tells me that won't happen. The market doesn't care about what you think. Don't add to losers. MSK Capital, stick to your strategy and I'll stick to mine. Thank you very much. As I said at the start of the stream, I don't come here to take advice from people I don't know on the internet. Guys, have a good one. Enjoy the rest of your year and I'll see you in January. Speak soon and I love you guys very much.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I do hope you're doing well. My 2 trades are running pretty nicely today, especially euro dollar. There seems to be a liftoff, sort of an explosion higher. I'm not sure if we got any breaking news. I don't really see it. So euro dollar running at a 1.9 to 1. And NZD/USD running at, let's see. So NZD/USD running at around 2.3 to 1. Really happy with these trades. Really happy with the setups. The main catalyst that I can see today is the Fed, or yesterday was the Fed decision, which was a bit more dovish than expected. So just a bit more dovish than expected. But I would say it was mostly people pausing, waiting out the Fed, waiting to see what will happen during the Fed meeting, and then going into the markets and then looking to execute their positions. So I think the Fed meeting was not just about being dovish or hawkish. I think it was mostly also an event that needed to pass for people to go back in the markets, for people to go back to executing their, let's say, yearly top setups in 2026, in the new year. Both of these trades were signals in the A1 Discord, so I just want to mention that because I'm pretty proud of these signals, if I'm being honest. Pretty happy with the trades. So if you want to get these types of signals, I had some other ones like this as well. So this is not the first time we have had a liftoff. You can join the A1 Discord with my code, which is Marco. Okay, so discount code Marco. You can get these signals and much, much more in the A1 Trading Discord. Hello, Sluggy. Welcome to the stream. I'm looking for dollar shorts against NZD and CAD. So NZD, I totally agree with you. USD CAD, has it recovered? So USD CAD has sort of is still going lower. So I don't really believe that USD CAD is the right play. I did of course take a stab at it right here. Unfortunately, I did not take profits. In the end, this was a break-even position. But now it's just started to melt lower. So it has started the meltdown. Not looking so great. Again, dollar is losing value all over the place, but USD CAD just cannot seem to catch a break. I think the main issue with USD CAD, so the main issue with USD CAD is the central bank meeting. If we go to the Forex Factory calendar, we had the Bank of Canada rate statement, overnight rate, and the Bank of Canada press conference. They were kind of neutral, so they weren't really hawkish. I know some traders, some investors expected Bank of Canada to jump on the hawkish train. They didn't do so. So they didn't jump on the hawkish train, which pretty much made the CAD lose value. So USD CAD went down. Generally, I do like playing dollar shorts. I think the most powerful way to make money in the markets right now is dollar shorts. So essentially, silver going higher, just explosion higher, of course, not producing any pullbacks. So I can't really get in any of these levels. Gold is not really moving anywhere, being a bit flat, but technically respecting the trend line. So I would say more bullish than bearish. Fundamentally, definitely more bullish than bearish. But silver right now seems to be a clear winner. If we take a look at the gold to silver ratio, let's take a look. And let's go to the monthly chart. This is a good ratio when that you can then spot when gold is oversold or silver is oversold, and you can try to catch a setup based on this chart. So right now, based on this chart, the equilibrium would be, I would say, somewhere here. So I would say we are right now at the equilibrium. When we were in these areas, gold was worth much more than silver, so you would expect for silver to gain more value when compared to gold. But right now, we're smack dab in the middle, and I just don't see any edge or any extra confluence to buy or sell silver just according to this gold to silver ratio. So this is no longer the play. For me, silver is a great buy because fundamentally, I'm expecting huge inflation. So I'm expecting some really, wow, this looks very bullish on the monthly chart. This looks just like an explosion higher. Crazy. Yeah, basically I'm expecting inflation in 2026, massive spending, devaluation of the dollar, silver going higher. Technical analysis is absolutely bullish. I was looking for buy setups, but there has been such a huge lift off that I just don't see any opportunity to get in. So I would like to see a pullback like this happen, and then I would be buying around the 20 EMA. At this point, I'm not going to be the one to chase the highs. I'm not going to be the one to get in at all-time highs. Not my style, not the way I trade, so not for me. Hey, Aaron, Marco killing the market end of the year. Your microphone was right after all. Looks like I got the lucky microphone arm. Thank you, Charles. Euro dollar overbought on the 1 hour. Personally, I don't like using overbought or oversold signals. You can implement, let's say, RSI. But for me, these sort of indicators, they can go on for an extremely long time. So, I mean, look at this. So we were essentially overbought from the 19th of September to the 17th of October. See? So basically, that was huge. If you sold on the 24th of September, you would be crushed. So if you got in on a sell setup, markets can stay overbought or oversold for much, much longer than you can stay, let's say, in your position. So I really don't like overbought, oversold terms. Maybe you can use it as an extra confluence, but using RSI for me is just not the way to go. Again, just my view, my opinion. I'm sure there is some traders out there that make money with RSI. Can you break down the trade? Sure, I can do that a bit later, depending on how much time we have. Euro dollar, Robohola, hey, welcome to the stream. Well done, Marco, on your Euro dollar and NZD USD trades. Very motivating. Thank you very much for the feedback. I meant USD CAD short upon pullback, if any. Short. Let's see. Oh, so you want a short USD CAD? Okay. So maybe that's an okay idea, but I'm not really getting the polarity. Why? The reason I like, for example, NZD USD is because there is a clear polarity in central banks. The Fed is clearly dovish, while the RBNZ, Central Bank of New Zealand, they are clearly hawkish. So you're getting polarity in the stance of central banks. While with the Bank of Canada, there's not a clear view right now. We were expecting them to be hawkish. So we were expecting for a hawkish sort of event it didn't really happen. The market did go lower, so you could say that the CAD gained some strength, but the key for me is still I want to find one central bank that is dovish, and I want to pair it against a different central bank that is hawkish. So that is why USD CAD is at this moment not for me. Maybe in the future we can get the Bank of Canada to go completely hawkish. That would be great. I think that would be a great fuel to get a bigger downtrend. SNB, Swiss National Bank, came out a bit dovish, signaling negative rates if needed. That is interesting. Thank you very much for sharing. So there was at 9:30 there was the SNB monetary policy, SNB policy rate, SNB press conference. So if we take a look at, let's say, USD CHF, what can we see here? If they're dovish, that means they are the same as the Fed, but looks like the dollar is just losing value all across the map. So let's see, for example, do we have NZD Swiss? Yes. Let's see. What is this? I'm not 100% sure, but I will hide it. NZD Swiss, yeah, just gained value, but on the daily chart actually lost value on the daily chart, which is interesting. So the Swiss, I'm guessing on that event, it gained some value. Interesting. Dovish should be bearish. So dovish usually means negative for the currency. I'm looking to sell gold at 4240, which is the fib extension level. So in my opinion, selling gold is a very, very dangerous proposal. So I would personally avoid selling gold at all costs. I don't have an edge in selling gold, and I believe that 98% of traders don't have an edge in selling gold. I know there's a couple of specialists out there. I know Max, for example, likes to short gold in some brief intervals, so like for a quick scalp. But for me and for the majority of traders, if you're not going to be scalping, if you're going to be swing trading, I would say stay away from shorting gold. Your edge is much, much better if you just buy. So your edge is much more powerful if you just buy gold and get in on the uptrend. It's the same as with a casino. I think Nick talked about this. So a casino, or Chris Pulver talked about this. A casino has an edge of 55%. That means if 1,000 customers come in, as long as they keep playing, the casino will win 55% of the time, and the customers will win only 45% of the time. So over time, their edge will play out. It is the same as with getting in on the uptrend on gold, on silver, on the S&P, on the NASDAQ, on the DAX, or not DAX. No, I'm sorry, not the DAX, but most of these other assets that just go up over time. With these assets, you have an extra edge over the house. Your edge is somewhere around, I think, 60% maybe, if you just keep buying, maybe even higher. So when you're selling as a swing trader, as a more of a longer term position for, let's say, a couple of hours or a couple of days, your edge is already negative. That's not good. Not the way you want to be positioned. And I've seen too many people in the retail space lose money because they were short on gold. That's why I'm very afraid to do it. I don't have any reason to do it. I don't have a clear edge to do it. And I usually, let's say, steer people to avoid selling gold. High number of puts on gold. Look for buys. Okay, so you're looking to sell and then buy at the yesterday New York session extension. Okay. DXY looking to head and retest 96.6. So for the DXY, I don't think it's going to go extremely low. I know Ballout is calling for DXY to 95, to this level. That would be a move of another 3%. It could definitely happen, so it's not like it's impossible to happen. But I believe you need a massive catalyst for that to happen. So you really need to see something be broken in the markets for the markets to fly all the way to 90, 95, and maybe even lower. Like we had it happen. This year was very bearish for the dollar. That is correct. But there was something massively broken. You know what it is? Tariffs. So Trump tariffs, crazy let's say, approach from Trump, crazy tweets, crazy announcements. People lost faith in the dollar, and the dollar kept dropping. So this move was explained by something that was fundamentally very important and fundamentally very broken. Unless we get something like that, unless we get Trump being super crazy, I don't see the DXY dropping by so much. Just my thinking. Okay. Max trades 1 minute and 3 minute, very complex style, but very profitable. Yeah, I think Max is doing pretty well with his approach. But again, he's a specialist, so he specializes in quick sells of the NASDAQ or gold or some of these other assets, which I would personally never sell. So there are people that can do it. There's people that can do it, but most of us should stick to the easier stuff, let's say more simple stuff, unless you really want to go down that rabbit hole. I'm waiting for gold to hit 4250 to 4260. Okay. I'm thinking to buy if it broke resistance for gold. I mean, I'm definitely long on gold. Fundamentals are bullish. Technicals are bullish in my opinion. It's just that silver looks a bit better. If you jump on the Edge Finder top setups, by the way, there has been some updates on the Edge Finder with this small button explaining what you're seeing here. So kind of a mini tutorial integrated into the Edge Finder. Oh, where is my search bar gone? Okay, so we're missing the search bar. But if we just look at metals, gold, very, very bullish. Damn. Silver, bullish. That's good. That's definitely something I want to see. Edge Finder showing me a bullish reading. That's very good. So another extra confluence. I'm not going to be buying here. I don't think this is the right price for me. On silver especially, I'm not the one to be chasing. So I'm not the one to be chasing these highs. But if we do get a pullback, if I do get a better price, I'm in all day. I'm definitely gonna be in. I do want to mention the sponsor of today's video. If you guys are looking to get funded, get more trading capital, I highly suggest you check out DNA Funded. So great prop firm, ran by professionals, reliable firm. They are using TradeLocker, which is, in my opinion, the best software for, I would say, trade execution, because they have a built-in position size calculator. So usually what I have to do for my MetaTrader, I have to always use the MyFX book sizing calculator. But with TradeLocker, it's built in. So this is my personal account, 50K account, funded stage. I got to the funded stage. Unfortunately, I'm down $1,750 on this account. So not working out so well right now, but part of the game. I will just keep executing these positions. What I wanted to do or say, you can get 25% off. 25% off with the code A1Live. So if you're looking to get funded, this is, in my opinion, a great price for a reliable prop firm. So A1 Live gets you 25% off any challenge. Make sure you guys check it out. And by the way, this challenge, my personal challenge, is completely traded by ChatGPT. So I get daily trade signals from ChatGPT. I put them into the DNA Funded account, and this is how it's looking right now. Past phase 1, past phase 2, and now on the funded stage in the red. Part of the game. I'll keep on executing and update you guys during these streams. So something I want to talk about is, I want to talk about the stock market. I want to talk about the SPY or the SPX, and I want to talk about the NASDAQ. Now, on the SPX, we're getting a red day. NASDAQ, same thing, if I'm not mistaken. Yeah, NASDAQ, same thing, red day. Why is this happening? So why are we getting a red day? Well, we actually had a pretty dovish Fed. The dollar keeps losing value. You would think this would go up. Yesterday was a bullish day, so Wednesday was bullish, but we had, I think, Oracle. We had Oracle earnings, if I'm not mistaken. I think we should be able to get it on the breaking news. Yeah, so Oracle earnings, but it isn't on here. Let's see if we can go to equities, Oracle. Well, I'm looking for the red news. Oracle plummets 11% on weak revenue. See? So Oracle plummets 11% on weak revenue, pushing down AI stocks like Nvidia and CoreWeave. So Oracle, a big AI player, because I think they build a lot of data centers. If we look at this, yeah, it's a big drop, a big drop in value. They had earnings bombed, so earnings were not good. They also signed a massive deal with OpenAI, which no one knows how OpenAI will fulfill. How will they pay for this massive promise of an investment? Will the data center build out actually pay off? I don't think it will, because it's just a huge investment. They are counting on, I think, 40% of the whole world population to be using ChatGPT and OpenAI. That's not going to happen. That's just not going to happen. Because there's so many of these AI software platforms, and they do the same thing. Like, try Grok, try ChatGPT, try Google Gemini. It's the same thing, absolutely the same thing. There's no difference. So I don't see how OpenAI will capture 40% of the world population. OpenAI is highly tied with Oracle. Oracle is a big player in the stock market, a big player in artificial intelligence. And again, it just dropped 10%. That was a big scare for Nvidia, I think. So it kind of brought down the whole AI sector with it. Let's see. TradingView is having one of those slow days. So at least once in 2 weeks, I have TradingView creating these bugs and just not moving. I don't know what it is. I don't know why it's happening, but for the money that we're paying, this should not happen. TradingView, please fix your stuff. See, so Nvidia down on the day as well. So I think this is bringing down the SPX, the NASDAQ. Not good. Definitely not a good story. Personally, I'm not looking to buy. I'm focusing on the NASDAQ because it's a technology sector. So it moves the most, has the most volatility, produces the best moves in the markets, in my opinion. And AI is a big story right now. AI is essentially the biggest contributor to the market movement. So I'm going to focus on the NASDAQ. If we can load the chart, yeah, this is going to be a problem now. Essentially, I'm not looking to buy it. I'm being a bit more patient. If we look at the Edge Finder, let's try and do that. Let's go to the NASDAQ, and while that loads, we're going to look at the indices. NASDAQ actually very bullish. SPX very bullish. That's good. That's good to see. I think we recently got the COTS as well. Commitment of Traders, latest Commitment of Traders report. When did this come out? December 9th. So pretty recent stuff. Yeah, see, you have this information button. Anyway, the symbol USD, what they buy? So they bought the dollar, they bought the NASDAQ, they bought the Aussie. Why did they buy the dollar? That doesn't make a lot of sense. But it's actually not so bad to see because the momentum is down. So the momentum on the dollar is negative, is bearish, while the positioning of the big players is still bullish. That's a good phenomenon. That's a good occurrence for even more bearishness to come. That's at least for what I got from my research. So a couple of OG traders are talking about this phenomenon where if you get bearish momentum, but the big players are still bullish on something, like they're bullish on the dollar, they will soon need to flip to bearish. And that flip, because they're massive players, it will ignite even more bearish movement, even more bearish price action. So that's what I'm counting on. And I'm trying to again, exploit that with euro dollar buys, NZD USD buys. That's the general game plan. I wanted to touch on the NASDAQ. So for the NASDAQ, I'm not looking to get in right now. I think for the Santa rally, it's a bit too late. Santa rally is a seasonality occurrence where in November and December, the stock market explodes higher. So I'm not looking to exploit the Santa rally. I'm just being a little bit more patient. The whole AI story is a bit unclear to me. Is it still bullish? Is it now time for a bit of a pause? Is there going to be some bearishness in the markets? So yeah, I'm getting a little bit confused with the overall stock market story. So I'm being patient. I'm focusing on what I know best, on what I trade the most. That would be Forex. So that's my plan. Let's see what you guys are saying. So hello, Max. Missed the long, wasn't short. Okay, so looks like Max went short on gold. Marco, where should I buy gold for a day trade? I don't have a clear signal, so I'm on gold. I'm being patient. I'm not doing anything. For me personally, if I was looking to buy, I would say buying somewhere close to the 20 MA. So for a bit of a pullback to come, that would be okay. Again, this is not financial advice, just a disclaimer, but catching a bit of a pullback around the 20 MA could be a good play because we're still respecting that trend line sort of here, still moving and touching the trend line. So it still looks healthy. But personally, not for me. Oracle's update reignited anxiety around stretched valuations in the tech sector and whether the enormous sums being poured into AI infrastructure will ultimately deliver the returns investors expect. That is interesting. They will soon rebrand to Skynet. That would be interesting as well if you watched the Terminator. I prefer Gemini. It's better than ChatGPT. I mainly use Gemini as well. So Gemini is, I think, a bit faster. The free version is a bit better than the ChatGPT free version. And Gemini keeps stealing market share from ChatGPT. If you look at the statistics, every 3 months, Gemini gets bigger while OpenAI client base gets a bit smaller. So Gemini is stealing customers from OpenAI. And I think it's justified because Gemini right now is a bit faster, better at what it needs to do. Oracle was expected, but I'm trading the dip. Okay, if you can put down how exactly you are approaching this dip. USD Swiss thoughts. USD Swiss, I don't have a clear edge on USD Swiss. We can jump onto the edge finder, see what's up. So, okay, it's going to be a bit tough because I don't have a search bar. I'll reach out to Nick. We'll get the search bar back. There was some error, I believe. So for USD Swiss, I'm clearly bearish on the dollar, but I'm not sure about the Swiss. I don't have a lot of information on the Swiss right now. Swiss is not on my radar. If I had to give you a bias and also look at the price on the daily chart, it looks flat. So the price action looks flat and range bound in my opinion. Not something I want to get in. But for example, NZD-USD, a perfect, let's say, example. Come on, you can do it. Perfect example of a momentum shift up. We had a sell-off, downtrend, and then we broke the upper trend line, right there, broke it with momentum, exploded higher. Classic move. Love it. I love your lives. Thank you very much for the feedback. Sports Addict, Sluggy says sell now. Gold buy level for day trade. Buy gold at 4195. Pull the FUB from. Okay, fib. Okay, not the FUB, but the fib. We have approached the end of the stream. I'll do one last thing. Let me just see what is also interesting. So what is moving today? Crypto is not doing much. I think you guys already know my stance on crypto. I think we're in a small crypto winter. I'm being more patient on crypto. Ethereum seems to be selling off a bit. Oil. Let's take a look at oil. Let's see. Oil just seems to be trickling lower. So I don't have any trades. I think oil is very much impacted by geopolitics. Very tough to trade, very tough to execute the position. But it seems to be going lower and lower, which may be good for overall inflation. You know, energy is a big contributor to the world inflation. So oil going down is certainly something that we like to see as general, like people. Okay. Marco, come on the DNA. I thought we would get the payout at the same time. So yeah, unfortunately, I'm a bit down on the challenge. Currently down minus 1.5K. Okay, at least the SPX position is in profit. See, there's a sell on the SPX. Running a little bit of profit now. Maybe that can work. We shall see. But Max, congrats to you. If you're getting a payout soon, I know you had some very good performance. Let me know how it goes. Thank you everyone for watching. This is going to be the end of the stream. You can also catch me tomorrow, by the way. If you want to know when I will be streaming, you can always find me on the A1 live stream schedule. See here. So tomorrow I'll be on at 9:30. 9:30, you can catch me. Thank you very much for watching. Selling the dollar, in my opinion, is the play right now. So my trades are working out pretty well. That's it. Thank you. See you in the next one.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.